Good morning, everybody. Happy Thursday. It's May 25th, 2023. Quick shout out to my good friend, my roommate from college, Rafi. Happy birthday to you today. Turns 54. He was with me in Louisville and Houston when the Aztecs were making their run towards the NCAA title last couple months. So also condolences to those followers and of Tina Turner. She passed away yesterday. That was a little tribute song to her. Wonderful, wonderful singer, and I know she's going to be sorely missed. But she did leave a nice legacy of wonderful music for all of us to play whenever we want. So let's talk about markets here. So it's Thursday morning. Futures were up strong today. Obviously, we know why that is because NVDA reported very strong earnings last night with very, very strong guidance for the quarters to come. There's a lot of collateral shrapnel, so to speak, off of NVIDIA's earnings, hitting a lot of other stocks like Marvell, Applied Materials, a couple of names that we have in the Action Alerts Plus portfolio, along with Microsoft too, and seeing some good action in ASM lithography and a few other names as well too. So it's going to be an interesting day, of course. We just had GDP revision just hit in the markets here just a few moments ago, and we can see here that GDP was revised upwards from 1.1 in the first quarter up to 1.3. So 1.1 to 1.3. Price deflator up. Expected 4%, came up at 4.2%. So increase in price deflator. Price personal consumption expenditures came in at 3.7 last time around, came in at 4.2 also. So inflation's still hot through the first quarter. I think some of the activity in the first quarter, some of the reasons why this was strong in the first quarter. Very, very strong retail sales in January, kind of slowed down and tapered off in February and March. We do see GDP sales were strong, 3.4%. Again, core price PCE, 5%. That's a strong number. That's a too high a number. That is not a number that the Fed is going to be happy about. We did hear the Fed meeting minutes, what was going on in their meeting, the last meeting. That came out yesterday. And of course, a lot of parsing through the data and some of the activity in the room there last month was about whether we should go with a rate hike or pause at the next meeting in June. Well, let's see what the Fed funds futures say about that right now. So Fed funds futures are now portraying a 38% chance of a rate hike in June versus a 62% chance of a pause. So it's about a little less than 2-to-1 chance of a pause versus a rate hike. But what's interesting is what I looked up this morning is if I go up to July, which is the next meeting, there was no rate hikes priced in more recently in July. In fact, they were pricing in possibly a pause in July and then a rate cut coming in September. Let's see what July looks like now. So July, you're seeing if we do go up to 5.25 to 5.5, it's pricing in at about a 37% chance that we pull that rate hike off the table. 48% chance that we pause up there at 5.25 to 5.5. 550 to 575. There's actually a 15% probability now of another rate hike in 2023 July meeting. Then we go out to September, right? That's when things sort of start. The market is starting to slow things down. Maybe a pause in September. So the Fed funds futures is now starting to price in the potential for 2 more rate hikes in 2023. Now, if we go out to November, let's go out to December. It's pricing in about a 475. I think, and again, this is probably going to be wrong unless the inflation data from now until then is favorable for the Fed's goals to get down to 2%. Of course, we did hear from Chris Waller who's a Fed governor as well too, and he said that, look, you know what? Until we get to our objective of 2% on the inflation rate, rate hikes should still be on the table. So if we do believe the Fed funds futures here, if we get up to 5.5%, there's going to be 4 rate cuts coming in. I just don't see that happening unless the economy is crashing. Now let's take a look at the economic data from the Atlanta Fed, right? And what does the Atlanta Fed tell us? The Atlanta Fed has this GDP now, so they're going to be changing this. On the well, it last changed on the 17th. It'll be changing again tomorrow. Probably going to be a little bit stronger from some of the data that we saw this morning. They're estimating a 2.9% increase in GDP in the quarter that we're in right now. We only have about 5 weeks left to go, of course, whole month of June and 1 more week of May, and they're estimating 2.9%. So the economy is growing rather strong and robust, thanks to the strong jobs market, right? And we saw some numbers this morning. The jobless claims number came down again from a much higher level. They were expecting 250,000. We came in at 229. And what does that mean? It means that the job market remains rather tight. We learned that earlier this month, April. The tight jobs market, unemployment rate went down. The JOLTS number, while it's starting to come down, job openings, it's still portraying a rather tight job labor market. We have tight job market, we have wages increasing and so forth. That's good for the economy. You know, I'm not gonna mince any words here. That's good and strong for the economy, even though some of these other segments of the economy are starting to slow down. We've seen some of the data this week, the PMIs. And so forth. We even saw Germany came out with recessionary numbers this morning. They're in recession. They came with a negative GDP. So, you know, maybe this recession is being pushed out a little bit further towards the end of 23 and into 24. Certainly, with 3 to 4 rate cuts expected by the Fed funds futures market, they're expecting some sort of disaster coming in on the economy. But, you know, the data, at least what we're looking at right now, and the how they parse the data, say, for instance, the Atlanta Fed, just not seeing it right now, right? So let's see how things go into the end of the year. And certainly, if you listen to the call from NVDA last night and a couple of other companies, all those, you know, albeit Snowflake really just got demolished here. But Splunk came out with they're a cloud company. They came out with really strong guidance. NVIDIA again came out with real strong guidance. They're saying that their business is strong and robust. They're getting lots of customers coming in and buying their products and services. So you know, there's a lot of debate going on here, whether it's going to happen, if recession is going to happen, or is it just slow down or something like that. But certainly, you have to realize and recognize that the strong job market is responsible for a lot of this strength in the economy. All right. We have a webinar coming up today, and I hope all of you get a chance to come in and go and listen to Sam DeMarco and myself. So, what is this webinar all about? Let me show you. It's a free webinar. It's about spread trading, and I think you're going to really find this very exciting. So you can go here right now, go to the website, the Explosive Options website, go to Trading Insights, to Webinars, and you'll see it down here. Unlocking the Keys to Success. Join Bob and Sam as they take you through steps of spread trading. I'm going to explain about what spread trading is all about, why it is a great tool to have in your toolbox of trading, how to put yourself in position to take advantage of moves that you see on the charts, you see in the technicals, with minimal risk. It's a great place to learn how to different structures. Sam's got different things on right. He's got call spreads, he's got put spreads, he's got condors on. The condor is fantastic. It's doing extremely well right now. It's going to expire tomorrow. Probably be able to get Sam out at a full profit level on that one. He's going to talk about that trade today. He's also going to put out maybe one possibly even 2 new trade ideas for everybody. That's for free. And there's also going to be an opportunity for you to join the Spread Trader service. Get this, for a whole month for free, to watch what Sam's doing for risk-free for the entire month. So that's going to be out there for you as well. So I hope I encourage all of you to come to the webinar today. We already have about 150 or so people registered. We have plenty of room for all of you to come into the webinar. So please sign up and spend a little bit of time. And at least at worst, if you're not interested in spread trading, at least you're going to learn something for about an hour. So that's that. And finally, let's go to the charts here. S&P 500, you can see, is in correction mode right now. We closed below the 20-day moving average for the first day. Yesterday, we did near the lows of the session. And, you could certainly make an argument that, we have a double top in place, right? Right. So that from early part of February to the late part of May over here, markets are down in mostly in the month of May. We closed strong in April, and we're down now in May. The S&P 500 is bad. The Dow Industrial is much worse than the S&P 500. Nasdaq's up a little bit. Was up a little bit going into yesterday. They'll be up today, obviously, with the strong NVDA numbers. But listen, you know what? I've got this area here marked as the line in the sand. And this is about 4070 or so on the chart. 4070 would be your line in the sand. So which means you do have some room to come down this far, possibly into early next week. Now, the crosshairs that we have right now, obviously, we're coming into a 3-day weekend, and we usually see volatility recede, come down. People sell volatility into a 3-day weekend because they know that decay is extremely helpful for a seller, right? Sam's going to talk about how that works, the theta decay, that sort of thing, on the webinar today. So that's another thing if you want to learn about. You've got a chance to listen to Sam about that. But certainly some room down to this 4070 area. 4100 held pretty strong yesterday. So we'll see how things go today. Volume levels have been rather elevated here this month of May. I see volume trends are up, and which is normally, as we head into the summer, things sort of slow down a little bit in terms of volume trends. We'll see some of that recede, which means that when volume trends are coming down and volatility starts to kick in the markets, you get these big, huge, erratic moves in the markets. We had a big, strong move in the VIVIX yesterday, the VVIX. And why is that? Is because there's all this uncertainty going on with the debt ceiling crisis right now. Is it going to be resolved? And how is it going to be resolved? When is it going to be resolved? There was some warnings from Fitch saying that they put the U.S. credit rating on watch right now, which means that they are looking to cut the rating for the U.S. debt like they did in 2011. A couple other agencies did that as well too. So I mean, I don't know. People still buy the U.S. debt. Still people buy bonds. And I'm not sure if there might be a negative reaction to that right away. People might start panic and start selling, but that might be actually be a good buying opportunity, as it was back in 2011 when that happened again. So I'm gonna lay it down here, everyone. I have some ideas. I was looking at Deckers earlier today, as they do have earnings coming out. I haven't been playing too many of these earnings lately because my fortune has not been great. Although I do have some Splunk, which came out. This stock has traded back down to the 100-day moving average. And oftentimes when we get a big move down like this, especially right in front of earnings, it tells you that they're letting a lot of air out of it. It's come down about I want to say about 20% from the recent highs. This is one I have my eye on here as well. Next week we have CrowdStrike coming up. We'll talk about that one next week. And then today is also another good name that we have coming out is Workday, WDAY. That's one I've had my eye on as well today. Really strong earnings last quarter when they reported in February, and I think that this stock is positioned for a good move higher. I know that off of the NVIDIA earnings, There's going to be some names that are going to they're going to look real strong. Marvell is one of them. That's the name that we have in the Action Alerts Plus portfolio, and maybe opening up close to 48 and change this morning. They do have earnings coming out after the close today as well, so keep an eye on this one. I do have some calls in this one, but I may be selling them and maybe rolling them up a little bit later on today. So I think it's going to be in Costco. Costco, miserable looking charts. This just looks hideous here. But remember something, it's Costco, right? And we did not see very good numbers from Target. We saw some mildly good numbers from Walmart, and the stock hasn't responded real well. But those two stocks actually went up a little bit into earnings. Costco, not so much. So I think every time I'm in Costco, there's a huge amount of people there, huge lines, and so forth. So that's my boots on the ground analysis over here. The stock has really come back a lot. I think maybe the bad news is already priced in here. That's just my opinion on this thing. I do have some call spreads on, some diagonals working as well too. If you play Costco, remember it's an expensive option because the stock is expensive. It's almost $500 a share. But if you can get above 500, maybe this really resistance here at 505 here, and then past 510, it's got some upside. Again, I'm getting ahead of myself here. We don't really know what's going to happen. I think they're going to eventually raise the prices of the membership fees. It could be tonight or could be soon after that. But certainly that's going to give a pop to the stock of Costco. So I'm going to leave it there right now. And again, thank you everyone for spending a little bit of time with me today. And I hope you all have a chance to come to the webinar today. It's going to be great. We're going to have a lot of fun with that one. 4:15 Eastern time on the webinar. And Sam and I will be there. We'll talk about spread trading. Have a great weekend, everyone. Enjoy yourself, and it's a nice long weekend. Thank you very much to all of our men and women in the military and the service. Thank you for all of your service, and enjoy your Memorial Day weekend. And I will be actually enjoying my second anniversary next week, and with my lovely wife, Leanne. Have a great weekend, everyone, and I'll see you next week. Which, by the way, not Monday, next Thursday. It'll be June 1st. Will be our next date together on Daily Bites. See you then. Bye. Why so hard to be good to me?